This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus has moved closer to a compromise with African oil producers on 2024 output levels. 4 OPEC Plus sources told Reuters, after disagreements over those targets forced the group of oil-producing nations to postpone a key meeting. OPEC members Angola and Nigeria were aiming for a higher oil output allowance, officials told Reuters on Thursday. The postponement of the meeting of OPEC and allies such as Russia, known as OPEC Plus, from November 26 to November 30 sent oil prices sharply lower. But they have since recovered, with Brent crude prices on Friday trading above $81 a barrel.
The United Arab Emirates will ramp up exports of Abu Dhabi's flagship Murban crude early in 2024 as a new OPEC Plus mandate kicks in and barrels are diverted to the international market owing to refinery maintenance, according to traders and Reuters data. That will add to increased output of other light sweet crude grades, including from fellow OPEC members Nigeria and Angola and non-OPEC countries such as the US and Brazil. The factors are weighing on global price benchmarks Brent and West Texas Intermediate and putting pressure on the Murban spot price.
Moving on to the top news in the energy sector.
A meeting of more than 100 countries on Friday agreed to an interim goal for emissions reductions from global aviation by 2030 by using less polluting fuels. But China, Russia and some others aired concerns about the impact on their economies. The goal, which came after 5 days of UN-led talks in Dubai, called for 5% lower carbon emissions through the use of cleaner energies like sustainable aviation fuel, SAF, by 2030, the International Civil Aviation Organization, ICAO, said. An earlier draft had a target of 5 to 8%. The United States told the closing session of the meeting, which was held ahead of next week's COP28 climate summit, that the goal sent a clear and positive signal to the financial community, which must invest in new clean energy projects.
Brazil has signed onto an agreement to triple renewable energy globally by 2030 and shift away from using coal, the country's foreign ministry said on Friday, joining a prospective deal backed by the European Union, US and United Arab Emirates. South America's largest country is now one of roughly 100 countries that have signed onto the deal, according to a European official familiar with the matter. Sources told Reuters earlier this month the aim is for the deal to be officially adopted by leaders attending the United Nations COP28 climate negotiations that begins next week in Dubai. Next, we have the top news in metal markets. Lithium prices in China fell more sharply this week, hitting a 26-month low, as a trial delivery of the metal to the Guangzhou Futures Exchange indicated larger than expected supply in the world's top producer of the battery metal. The most traded January lithium futures contract on the exchange edged up 1% on Friday to end the week at 124,050 yuan, $17,202.65 per metric ton, down 10% on the week. They shed 7% last week. It posted a 7% tumble on Thursday and now stands at less than half its price when the contract began trading in July.
Nickel prices fell below $16,000 per metric ton on Friday for the first time since April 2021, under pressure from a looming increase in a global market surplus and a build-up of bets on even lower prices known as short positions. Low volumes and liquidity since the nickel crisis erupted on the London Metal Exchange, LME, in March 2022 when prices doubled in a few hours and the LME suspended trading are partly behind the accelerated price drop. 3-month nickel on the LME was down 2.5% to $16,200 per metric ton by 17:31 GMT, after earlier hitting $15,995. LME rules imposed after the crisis capped the daily price limit at 15%.
We will now look at the top news in the agricultural sector.
Chicago Board of Trade soybean futures tumbled on Friday under pressure from favorable rains in Brazil, the biggest global supplier, analysts said. The market has pulled back about 5% since jumping last week to its highest price since August amid concerns over hot, dry weather reducing output in northern and central Brazil. The area of concern shrank this week, traders said. Brazil rains pick though early next week, said Terry Riley, senior agricultural strategist for Morex. CBOT soybeans fell 25-3/4 cents to close at $13.30 -3/4 per bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.